Today we have Yossi Goldlust of the Cryptocurrency Traders of Seattle meetup group, and Yossi also has some experience running a digital exchange. Calling this the golden episode. My last name is Goldfarb, Goldlust. Lots of gold in the room. Thanks for joining, Yossi.
Thank you, Seth. It's a pleasure to be here.
Are you more client-facing or business-facing? Or like, what part of all this do you directly deal with?
I face everybody.
Okay,
Wherever.
all of it, yeah.
So my job is to fix problems, and secondly, ensure that long-term the customer experience gets better and better, and that's why I face everybody. When a customer is unhappy, of course, I'll handle the escalations. When we're not satisfied with how our bank is able to support us and our customers' needs, then guess what? I'll be talking to other banks as well to see what our options are. At the same time, I'll work with the software developers to not only play the role of project manager, but develop with them in detail specifications for the work that has to be done, and test it to ensure that it works as expected and as it should.
Gotcha. So you work with the engineers or developers to try and get all this stuff out?
Yep.
Cool. So is there anything else you can do in the meantime, or what else do you do in the meantime to drive operational efficiency, since you have to deal with the banks and all of these things?
So the other part is being consistent, actually. This is one of the biggest challenges that you have, especially when you're smaller, is that you're constantly in firefighting mode, where there's always some new challenge that's unexpected that absorbs your day almost completely. And yet you're not going to make real progress if you don't put aside time every day to deal with the small, unglamorous, but important details. So organizationally, I've made it a point, for example, just to have regular meetings with different parts of the company to talk about how things are going. It sounds like a no-brainer, but it's actually quite hard to maintain on a consistent basis, because that means that whatever the fire drill of the day is, sometimes saying no, or guess what? You know what? Let's just adjust the timing of the meeting. But we've got to talk for a little bit today about to follow up on the items we talked about yesterday.
Definitely. Cool. So, as someone who gets to see all of the sort of behind the scenes stuff that goes on with an exchange, are there any trends that you've noticed that are particularly interesting?
Trends that are interesting in terms of demand for coins, in terms of people's trading strategies, in terms of maybe technology.
What sticks out to you? Anything?
What sticks out to me? Well, let's see. So I think the relationship between news and trading activity, you really can see it, right?
You really?
Of course. So, for example, when Ripple surged by more than 100% on Friday morning, I knew that it was going to be a busy day.
Yeah.
And of course, we had a nice increase in deposits that day because people wanted to capitalize on Ripple, and it was quite funny. Why was Ripple surging, for example? And in reality, it's just because of the news that SoftBank might implement, the XRapid platform with several Japanese banks next month. It might.
Fingers crossed.
Right. Look, they'll eventually do it, right?
Yeah.
So I think chances are strong that Ripple is going to have a chance to prove itself nicely in this next 6 to 12 months. But exactly when and how it's going to play out, there's no way to know if you're not working at Ripple or at one of these banks that's going to be using its products.
Have you had to worry too much about whether or not the tokens that you're dealing with are securities or not? Or is that...
Oh, so that's something that we care about.
Yeah.
So that's something, whatever we list on our exchange, we believe that they are not securities.
Okay.
And we have a legal team that helps us feel confident in that belief. And you know what? Look, the legislation isn't done yet, so we'll see how that plays out.
Yeah. So Ripple is a pretty controversial token. What's your take on it?
My take on it is, number one, Ripple paid a fine in 2015 to FinSec for operating some sort of unlicensed money transfer activity, or for not complying with some regulations under FinSec, where they paid that fine. It was settled. And given that since then FinSec never enforced any sanctions against security-related activity on Ripple, it would be pretty hard today in the United States to rule that it's a security, because a precedent has already been made. I think it also doesn't hurt that they've hired people, leading executives from companies like Fannie Mae. That will be sort of helping them make the case that they're not a security. So chances are strong that they're not going to turn out to be a security.
Yeah, that sounds like it. Or yeah, it sounds like that they've done a lot to ensure their legitimacy.
Oh, absolutely, absolutely. Their challenge, the big challenge, is actually the utility, right? So the big price surges for Ripple last year had to do with a lot of investors didn't really understand the differences between the Ripple products. And they misinterpreted what the news of banks using certain Ripple products actually meant. Similarly, or secondly, Ripple was not very available. It was hard to find places where you could buy Ripple, especially in places like North America. That drove the price up.
Okay.
Because
that makes scarcity.
Scarcity drives things. So going back to Ripple's future, the real test is going to be, and by the way, they have not passed that test yet, and it's ahead of them, and it's a meaningful challenge, is getting financial entities like banks or Forex companies to start using XRapid. That's the product that uses XRP as a way to transmit money. There isn't a lot of that right now. It's only when banks really start or these other types of organizations I mentioned really start using XRP to conduct financial transaction on the scale of tens or hundreds of millions of dollars, that Ripple's going to prove itself, and that if it gets to a price of several dollars or $1, it's going to be sustainable.
So do you think that's actually going to translate into savings for consumers, or is this just going to save banks money on their interbank transactions? Like, how does that shake out?
So you know what? I think it's going to depend. Some banks may want to take advantage of how they can increase their profitability and not pass it on to the consumer. But you can be sure that there will be some that, at least for marketing purposes, will talk about much lower fees as a way to win market share.
That makes sense. Yeah, I mean, even if you can just promise faster transaction times, not having to worry or not having to wait 3 or 4 days for your money is definitely a selling point right now.
Absolutely. Where the biggest impact is going to be, though, is not going to be in North America. It's going to be in Asia, Africa, and Latin America, in places where the economies are much less developed and people earn much less money. Having the opportunity to transmit money across borders, like say, people from various countries like Mexico or Philippines who have large populations that work in other countries that send home money. Guess what? For them, this is huge to not pay the several percent transaction fees that they currently pay on the money that they've put aside for their friends and family back home, and to have it delivered within minutes or seconds as opposed to days.
Yeah, that's huge, for sure. So speaking of tokens getting listed, what's the experience like for a token that wants to get listed on the exchange?
So I'm laughing because I'm tempted to talk about emails that we receive that
Oh, please.
explain how this particular token is going to solve the world's problems.
Oh, yeah.
and so forth, or what can feel like a lack of consideration of how they're coming across, where we really care about making sure we have a great customer experience. So anybody that we are going to list, we should feel like there's value to it. So sort of a no-brainer, but yet it often gets forgotten, is present good quality content like white papers that are readable and succinct in summarizing the value of what you're doing. Have a valuable problem that you're solving, and give us reasons to believe that you can actually solve that problem, that what you're offering is a better way to solve it than alternatives. So we're actually fairly careful, especially at this point, about adding new tokens, because in this year we haven't seen that much new tokens that are taking on important problems in quotes better ways than what's already there. You've got a crowded field of dozens of tokens that have great potential.
So how many of those emails do you get like a week?
Not a lot.
Not a whole lot?
Not that many. It's not. Let's say a few, somewhere between 0 and 5, depending on the week.
Okay. So let's say you do get an email and it seems legit, you like it.
Okay.
You send it. What's the next step? Do you send it to the legal team, or where does it go from there?
Yeah. So if it passes the sniff test of a useful problem, they're providing a believable way to that their approach to solving the problem is better than what's out there, or adds value. There'll be 2 more steps. Legal team to assess whether we're taking on any new risks in listing them, and also assist maybe with background research on the people involved. And then we want to talk to those people and
The people listing the coin, yeah.
and spend a little time either on chat or on the phone, getting to know them and hearing them make their case. Something that's really important in terms of evaluating an altcoin always is the founders, the people who are actually creating this coin. Again, it sounds obvious, but if you're just like any other kind of startup that quotes you're investing in, you want to see the people involved, that they have some experience where they've been successful, or some experience that positions them as people who can take on the problem that they're solving.
And how much? So a few weeks in between, like a couple of weeks for legal, maybe a couple of weeks to do that,
yeah,
or how?
Yeah, so probably it shouldn't take. If everything seems right, it shouldn't take more than 6 weeks.
Okay.
It can be less. It can easily be 4 or even 3 if everybody's responsive and the timing's right.
What about is there much work that has to be done on the development end as far as like integration? Is that something they handle? Is that something y'all handle, or how does that work?
So, from an integration end, the thing to consider is wallets, right? So, how are we going to store it, and what wallets are compatible? There is some meaningful work that we have to consider as well to programmatically and transfer these coins back and forth in a way that's safe.
Mm-hmm. So is there a difference when you're talking about dealing with the wallets? Is there a difference between the services that you provide to like a regular customer and say institutional? Or if somebody calls you up, like, I don't know, if a business calls you up and wants to put in significantly more money than average, like, are there extra security measures that go into that, or is it all pretty
not necessarily on a
pretty streamlined?
Technical level? The additional procedures have more to do with verification and making it clear the legal liabilities. So one of the big issues that you have with institutions trading is that they want to know that there's somebody who's taking on the legal liability of storing or delivering the asset in question.
Mm-hmm.
They want nothing to do with that, and we may not necessarily agree to that in every case, because it doesn't make sense for us as a business.
Why not?
Well, so for example, if you want to store millions of dollars worth of Bitcoin with us, absolutely, sure, you're welcome to, and we can store it, but to require us to go through our security procedures in detail before you even deposit money with us, and then ask us to take on to guarantee financially the value of your assets at all times should anything happen.
It's no means for that right now.
Yeah, it's just, it doesn't make sense for us as a business. It's not what the market does.
Mm-hmm.
There's a lot of volatility in prices, and on top of that, with crypto, there is this idea that you're in control of your own assets and your own money. So this goes against the prevailing conventions.
Mm-hmm.
And look, it's a separate business to securely store crypto as from a custodial perspective.
Yeah.
Our business is offering consumers a way to buy and sell various cryptocurrencies safely and quickly, and in theory as cost effectively as possible.
Okay, so can you speak a little more about what can be done on the custodial end, or what needs to be done on the custodial end to bring in that or make those institutions comfortable investing?
So there's probably two big things to consider. First, some sort of framework for removing the liability from them onto the provider of the solution. So institutions are not necessarily investing with their own money, right? So that's why it's so vital for them to move legal liability to others, right? Because they're actually taking money from other people, and they don't want to be held responsible if something goes wrong.
Mm-hmm.
So being able to transfer that risk in a way that's cost effective. So you've got now theoretically Lloyd's of London offering insurance policies for custodial solutions. There was a custodial solution, I don't know, 2 or 3 weeks ago that was advertising their relationship with Lloyd's, insuring them in the event of loss.
Mm-hmm.
That kind of insurance, by the way, is very expensive.
I can only imagine.
The second part, from a an access perspective, the type of access that an institution will be looking for is different than the typical regular consumer. They're going to want to have multiple levels of permission and very high and very highly granular types of access. You know that maybe they're going to want something like, say, 6 different accounts that have access either in full or fractions of what's being traded or what's being held, and with limitations around viewing versus transferring, adding, or withdrawing.
Okay.
So that you could say is a product in and of itself.
Yeah. So we talked a little bit about what it's going to take for institutional money to start getting into crypto. How does the current regulatory environment help or hinder what's going on right now? What's your take on that?
Well, so the current regulatory environment still isn't that friendly to crypto and is preventing.
I guess we should be specific.
Yeah.
Are we talking about specifically about the U.S. or do we want to make this international?
We can do both. You know,
yeah,
so I'm more North American focused. You know, U.S. and Canada as opposed to international. You know, if we're going to talk about international, it's interesting. Who would be the countries that would be interesting ones to talk about? Like, for example, India versus China versus Japan versus countries like Switzerland or Malta or even Israel, and then the United States. So, you know, I'll start with the United States because, relatively speaking, the United States is a little bit behind when it comes to crypto. Given the size of the U.S. economy and the financial resources available in the United States, the largest amount of participation in crypto isn't in the United States. It's actually overseas. And in the United States, you do have some big questions still about whether, for example, you can start having all sorts of financial instruments like ETFs or derivatives that would be required for institutions to get involved. You still have situations like states such as New York State putting some pretty big restrictions on what it takes to get a license to operate in New York State. And you do still have these questions like, say, Ripple, is it a security or not? In spite of me saying confidently before that it's not going to be ruled to be a security, well, still has to happen, the ruling. Maybe it'll take another 3 years.
Yeah.
You know, you have other countries like India and China where they're doing whatever they can to restrict participation within crypto for different reasons. You know, in India, you have actually people from their central bank admitting that they never really thought about it very carefully before trying to push through a ban.
Yeah.
With China, you know, my take on it, it's quite funny. The majority of Bitcoin mining happens in China. There is a lot of Chinese money in cryptocurrency, and yet it's a very unfriendly atmosphere for crypto. And I think that's because, and you know, here, this is my personal opinion, not based on my interactions with the Chinese government or anything like that. The Chinese government is a relatively authoritarian type of government where it's very important to them to be able to maintain control over citizens' lives. And one area that's extremely important to them is curbing capital flight.
Yeah.
Crypto is the perfect way to fly away with your capital.
Definitely.
You know, all it takes is a little USB stick in your pocket. You know, that it can pass through the X-ray machines, and that's fine. And nobody's going to open it up and see your crypto. Or, you know, there's other ways as well to transfer your crypto. That's a pretty big threat to the power of the Chinese government. Similarly, you know, China likes very much to create homemade products. So just like you know, Baidu is China's answer to Google, and Alibaba is China's answer to Amazon.
Yeah.
I suspect that China wants to find its own answer
Yeah.
to Bitcoin.
Do it on its own terms.
Absolutely, absolutely. You have smaller countries like Switzerland, Malta, and Israel that are having, you know, that are either embracing crypto or sort of reacting in mixed ways. So Malta and Switzerland have both become hubs of crypto activity, probably because of their histories as banking centers and the opportunities that people over there are sensing for crypto. Now, why them, but not say the Cayman Islands or a place like Liechtenstein? My best guess is they've got more resources. These are very wealthy, well-developed countries with fantastic infrastructures.
Okay, yeah.
And-
Education, development, talent, all
exactly.
Okay.
So you know, you can find probably some really top-notch software engineers in Switzerland,
Yeah.
and it's not hard to find good quality people in Malta. If you can't find them in Malta, well, guess what? You've got Eastern Europe and, you know, former Soviet Union, just a few hours flight away. On the other hand, a place like the Cayman Islands, it's kind of remote,
Yeah.
and, you know, who knows? Maybe they feel like they have their own answers to the problems that crypto solves, and therefore they don't need to innovate. You know, a lot of times you have situations where companies like Amazon or Google, when they were young or starting out, people would say, well, what's so hard about a company like IBM just copying them and wiping them out? Well, guess what? The people at IBM don't think that way. They see the world in a different way, and then they're focused on solving either different problems or solving problems in a different way.
Mm.
Israel's an interesting place when it comes to crypto because you have a lot of pro and anti crypto sentiment within the government. Israel's a pretty democratic society, so it's probably not a surprise that you hear loud voices on both sides, where on one hand you have lots of Bitcoin ATMs in cities like Tel Aviv, and you have rulings already a year ago or more that sort of clarify the status of different cryptos as commodities versus securities. And yet at the same time, you have situations where banks will refuse to accept fiat deposits because they were originally from crypto.
Yeah.
So you know, that's where we're at. You know, you I guess maybe something else that's interesting is to think about the IMF. That you've had already a few sort of about faces at the IMF, where last year you had a paper from one of the leading figures at the IMF saying that crypto was a dangerous sort of instrument with many opportunities to support terrorism and money laundering, and then a month later that same person says that there could be a place for crypto within the world financial system. And now recently, they're advising the Marshall Islands to not issue a digital currency because of the dangers involved in digital currency.
Dangers, again, going back to like funding terrorism, that sort of thing, or in terms of monetary policy?
Monetary policy.
Oh, okay.
Although in this particular case, I think I might be on their side, because what they've done is effectively just outsource the underwriting and orchestration of that digital currency to a startup company from another country that
Yeah.
doesn't have an established history of succeeding. And Marshall Islands is
Cringing just hearing
yeah,
this.
they're just
Oh,
saying
yeah.
like, look, crypto's the way of the future, but they take care of the details. And so you could say IMF is saying like, hold on a second, are you creating a national currency where you're just taking some random company and letting them take care of the details, and you don't see a problem with this? We don't think it's a good idea.
That's wild. I remember seeing some paper they put out last year that was getting into the implications for monetary policy, the implications of instituting a digital currency on a national scale, and what that would mean for monetary policy. And that does seem like a very gray area right now. So yeah, that's a weird. Man, I can't imagine putting your country's financial future in the hands of a startup. That's definitely a terrifying proposition.
Well, in theory, they still have a fiat currency as in parallel, right?
Mhm.
But yeah, it is interesting what's going to happen. We also we've got Venezuela and its Petro.
Yeah.
And we're seeing how that's
God.
going, right?
Yeah.
But I think that's more about Venezuela as opposed to cryptocurrency. Venezuela as a country is not it's not functioning effectively. So you can't really expect them to execute well on a cryptocurrency.
Oh, certainly. Well, and to my very limited understanding of the situation in Venezuela, like, what they're doing with the Petro seems very similar to the past efforts that they've made to try and prop up their economy with oil. They just slapped a token on it this time, and yeah, if it didn't work in the past, I don't know why anybody thinks it would work in the future. That's definitely frustrating.
Yeah, they're not they're not a good example for us, so
Yeah.
to speak.
Yeah. So who's all right? We've talked about like sort of the lay of the land, but who's really pushing things forward here? Like, if you had to look to either a country or maybe a business that's really trying to overcome these hurdles and pave the way for institutional money.
Backed is
Backed.
important.
I'm-
Backed is very important.
They've definitely been on my radar recently. So I've heard a bunch of names associated with them: IBM, Starbucks, and others.
Soon you'll be able to pay for your Starbucks latte with a Bitcoin, which, by the way, is not true. That is
Okay,
absolutely. That's one of those classic misunderstandings that I had mentioned earlier. An example with Ripple.
Yeah.
That's not quite what Bakkt is about.
Yeah.
So Bakkt is the Intercontinental Exchange, which is a very well-respected and successful Wall Street or financial firm that is running markets, financial markets like the stock market and so forth, where they are creating the infrastructure to issue digital currencies or otherwise offer financial products that would be of a digital currency nature or associated with a digital currency. So having a company like the Intercontinental Exchange launch a product like this together with Microsoft and other partners at minimum validates a hypothesis by a great analyst from Fundstrat, Thomas Lee, who explains that one of the reasons to have confidence in Bitcoin or maybe by association other cryptos is that Wall Street is watching how Bitcoin exchanges like, say, Binance are making a lot more money than they do.
Yeah.
Binance, within 1 year of launching, now makes more money than Deutsche Bank. The German leading bank that is 1 century old has been overtaken by this 1 year old startup that's distributed all over the world and has a much smaller staff. There's no way that Wall Street's going to ignore that kind of money. And Bakkt is proof of that. On top of that, Bakkt is solving the custodial problems and even legal issues that are holding back institutional money. Are they solving all of them? No, of course not. But you ask me who's really kind of leading the way or pushing things through. There's somebody that I would say is doing it and that I'm very excited about. I think it will be nice to see Ethereum futures get launched. This is again another important example of finding a way to develop a key cryptocurrency with a traditional financial product that adds value to the market as a whole. We all saw what happened with Bitcoin once the futures were launched by the CBOE. So having an equivalent for Ethereum is an important step forward. Something that's also, by the way, back to Bakkt, I can't resist.
Yeah.
They're talking about actually offering the option of delivering physically Bitcoin.
Okay.
That's a big deal.
Definitely.
That's a big deal. That to have financial contracts where you will receive Bitcoin and it's not just paper, paper assets.
Yeah.
Where you don't actually have ownership when you're buying. Big deal.
Do you think Ethereum can stand without Vitalik?
Interesting question. I don't know. I honestly don't know.
Yeah, I mean, the reason I ask is because with all of this, it reminds me of the pattern we see with Bitcoin, where every time the pricing Bitcoin drops, it's dying clearly, and proof that all of the naysayers were right all along. And now we're sort of seeing the same thing with Ethereum, where every little price drop is.
So this is my hope,
but, yeah.
right? So because Ethereum also has a lot going for it. It has behind Bitcoin probably the second largest number of developers working on it. So there you already, that's a very important reason to have confidence in Ethereum. They have a lot more developers than other, coins working on them. I think they also have some other interesting things happening. There are projects around sharding and using that to scale. I think can give them a level of speed that really will make them a lot more valuable. If you combine that with the adoption that's already there, that's a great combination. The fact that Google has chosen their technology for some blockchain products is actually a big vote of confidence. Some people talk about Stellar as a threat to Ethereum, and they've got IBM backing them. Well, guess what? I'll choose Google over IBM.
Really?
Oh yeah. I mean, IBM has a great business, and it's not going away. And this last, let's say, 20 years, I don't think it's really been the source of innovation for software. And Ethereum is, at the end of the day, it's software.
Yep.
Google, different story. They like Ethereum. They even offered Vitalik a job.
Okay, I hadn't heard that. When was that?
Yeah, that was a
while ago.
I don't know, something like at the beginning of the year, or apparently they had offered him a job, and just like he believes that exchanges should burn in hell, he probably said something equivalent to that. But that's Vitalik.
I can only wonder. That's dope. You mentioned Ethereum. You mentioned an Ethereum ETF a minute ago, and futures. Yeah. Excuse me. Well, I want to talk about these financial products in general, because the news around the Winklevoss ETF was like one of the things that sort of got my attention back into Bitcoin at the beginning of last year. Obviously, we haven't seen them approved yet. There's a lot of excitement over it every time we come up to one of these announcements. What's it going to take? Why hasn't an ETF been approved yet? What do you think?
My take on it is I've heard two explanations. The first one that I'm going to share, I like it best, which is no company submitting an application for an ETF has yet been able to prove to the satisfaction of the SEC that they will protect their investors from fraud and manipulation within the crypto markets. So even though the Winklevoss brothers, for example, have partnered up with NASDAQ to use NASDAQ's anti-market manipulation software, where they're monitoring Gemini's exchange for trading patterns that are suspicious, that would signal market manipulation, they weren't able to prove it to the SEC's satisfaction. And the SEC has reasons to be wary. You do have exchanges where there's a lot of wash trading, for example, or you do have situations where you've got collusion between big investors. Let's not forget, what was it? About a month ago, we had a surge in the price of Bitcoin that came from a very savvy investor creating a short squeeze on OKX and then taking advantage of it, and OKX trying to ask him to stop, and he wouldn't, and he didn't want to.
If you're getting money, I guess.
Exactly, and this cost probably tens of millions of dollars worldwide to traders, because again, if you remember, back in sort of early, I assume it was early August, or maybe it was mid-August, you had a big surge in the price of Bitcoin. Remember, it got into the 7,000s. We're right now hovering this month between 6,000 and 6,700 US. So that was that short squeeze, where that was real market manipulation, and OKX could not protect or stop it in time. So the SEC wants to see that. I think a second reason that I've heard about the SEC that not approving an ETF is that it's not necessarily in their best interest. If they approve an ETFs and everything goes well, fantastic.
Yeah.
A footnote in the history of crypto. If they approve an ETF and there's some devastating crash, they will be held responsible.
Yeah.
And I think that goes back to the first point. Now, there's talk of an ETF that's right now under review. Are they called VanEck? I don't remember their name, but they're only going to be open, for example, to accredited investors.
Okay.
This could be an important step forward, that by limiting the risk to the general retail market, you'll get sort of a soft entry or a soft pass by the ETF, which then will establish precedents for other ETFs. By the way, the Winklevosses have not given up. They're coming back. It's going to be the third time. Let's hope that the third time is a charm, and that the rule of three does not prevail, which is if it happens twice, it'll happen a third time.
Yeah. Who knows? What do you think about these crazy price predictions? Is there anything to them?
Not that crazy.
Yeah.
So here's the thing. At this exact moment, the idea of Bitcoin at 30,000, 50,000, 100,000, it's a fantasy. It sounds like an absolute fantasy. And take a step back and let's think about just Bitcoin. Forget the other coins. If you accept that Bitcoin is a store of value, yes, it's arbitrary, it's not backed by anything, you can't touch it, saying, guess what? Gold, dollars, euros. These are arbitrary stores of value that don't have real life utility. Just people agree that it's valuable, either because they believe in that government or they, there's a convention that for centuries this has been something valuable.
Mm-hmm.
So if you accept this premise that Bitcoin is a store of value, well, then Bitcoin solves some really important problems around security and portability that the other ones don't. So wherever you go in the world, and this is important as people become more and more mobile and cross borders, you can transfer or take Bitcoin with you in ways that you can't with gold or dollars or euros. Secondly, Bitcoin so far hasn't been counterfeited or tampered with. Can't say the same for the others. So given all of that, and then on top of that, that millennials don't trust banks. Everybody knows this famous quote from Facebook market research from 2015 or 2016 that says that millennials do not trust banks. Given that, and given that these next few years are when millennials start to have money to buy houses or otherwise invest in things like the stock market, given how they love crypto, there's a lot of money still coming into the market.
So how'd you get into blockchain?
Blockchain or Bitcoin.
Yeah.
Or
the difference. Yeah.
Well, you know what? They go hand in hand.
Yeah.
Saying that you're only interested in blockchain but not Bitcoin, that's like saying I only care about HTML, not the web. So I first became aware of Bitcoin in 2013. Somebody told me he was doing mining, and I thought it was a weird idea.
Yeah.
And I thought he was a weird person. And 2014, I had a little bit of money, and I wanted to invest, and I was considering different ideas, and Bitcoin caught my attention. And I was ready to go in on Bitcoin. I signed up with a few different exchanges, and two things held me back. At the time, those exchanges wouldn't let you withdraw more than, say, $500 or $1,000 a day.
Mm-hmm.
So let me see if I get this straight. I'm going to put $50,000 or $25,000 in your exchange, but it's going to take me 50 days to get it back if I ever want to take it away. Yeah, I don't like
Peace.
that.
Yeah.
And then at the time, I read that about 40% of the value of Bitcoin was controlled by 500 wallets.
Mm-hmm.
That really bothered me. So I took a pass.
Yep.
That was a great call on my part. Come 2017, I started hearing people who I didn't think were very savvy or innovative talking about Bitcoin and blockchain at work.
Mm-hmm.
And that told me, okay, maybe wake up and pay attention again. So towards the end of 2017, I dived in, and it's been crypto ever since.
Yep. Down that rabbit hole.
Mm-hmm.
That's cool. I like that analogy a lot. Whenever I see a lot of people trashing permission blockchains, it's like, oh, why are we letting the big boys take over our precious, decentralize everything? But to me, hating on permission blockchains is the same as hating on intranet. It's like you have internet and intranet. It just like, I don't know.
They both have use cases. So how can you intrinsically hate one or the other?
Yeah.
But that's where again, emotions, right? There's a lot of emotions involved with all of this, where people are sort of fixing their own personal feelings about the world onto this.
Yeah. Yeah.
That's part of being a person, I guess.
True. Fair enough. Well, I guess we both actually have a meetup to get to, so let's wrap this up. Thank you very much, Yossi, for being here. Been a pleasure.
Seth. Yeah.
Yeah.